gold's gone up, but not in a vacuum. Other things have gone up too. And you could say, hey, great, copper's up too. Well, but, iron is up, but those are inputs for your gold miner. So, the best thing we can say is that oil is actually not kept up with the commodities complex this time around, and that has helped. So, there's a couple takeaways here. One is, if your gold producer is not seeing better margins, then you got to ask yourself, who put that gold producer in my portfolio? There's something not right with this company. The other thing, though, is like in terms of the big boys, we've seen some of the producers miss guidance or miss analyst forecasts, right? And so they've been punished for not being as good as the analyst forecasts. But those forecasts were extremely bullish. So you've got companies, and I'm not going to name names, but you know who they are, some of the big boys. They've actually seen huge increases in production and money. They're making more, but they didn't increase quite as much as the analyst expectations, and then the stock price gets trashed. That's crazy. The company is mining more, is making more, and the share price goes down because some, analyst got overly excited or something. That makes no sense. And I do see that as an opportunity. But I would still, as you say, it's a stock picker's market. If the fluctuations put the best of the best, if not on the deep discount rack, but at least, back relatively on sale again, why would I go for anything less than the best? So the expectation thing is really interesting. And if you look at these polls, it's been really since the election. Like the ones, I forget whether it's Conference Board or University of Michigan or one of these guys, they ask the people for their political affiliation. And the inflation it's funny. I mean, it's sad, but it's funny, and it's so human, right? The Republicans' inflation expectations are like zero. Trump is going to, there's no inflation under Trump. And the Democrats think it's going to be 6% or 7%. And you average that out, and it's like 3%. And it's the opposite. Like, you asked them about growth. Well, the Republicans think there's going to be all this growth, and the Democrats think we're going to have stagflation or stagnation because it's Trump, right? So clearly, there's bias on both sides, right? So these expectations and what's going on, it's funny, but it's noise, right? We can't really rely on these numbers. What we can say, though, is that, Doge has, I have to say, I was wrong, dear audience. I was wrong. I didn't think that Doge would really make any material change at all. I thought we'd see the Grace Commission on steroids, a lot of noise and thunder. But ultimately, what power would they have? They make recommendations, and in Congress, as always, does nothing. But in fact, Trump gave them power. He gave them through executive branch direct power, at least on the parts of the government where the executive can, apply its authority. They've started. They haven't waited for the committee hearings. Back in the day, they'd still be picking office furniture for what what Doge is going to do, and making sure they have the wallpaper the right color to match the Doge logo and all this stuff. We're only a couple of weeks into this, so the fact that they've actually cut anything, and remember, in Washington, a cut is a decrease in the increase in the budget. If you propose a 10% increase in the budget and they slash it to 5%, this is seen as a cut, whereas, it's actually an increase. And so for Doge to actually cut anything at all, and people are like, oh, it's just a few $1 billion. It's nothing. It's a drop in the bucket. Well, pardon me. That is more than anybody's ever done before. Like, to me, this is... My metaphor for this is, if you have a dog that gets on your computer and writes an essay, you don't whack the dog for making spelling mistakes. It's a freaking dog that wrote something, So this is how I see, sorry, Doge dog, It is amazing to me that this has happened. So, this is a long preamble. Where I'm going with this is, I'm trying not to poo-poo Doge. I am admitting that both Elon and Trump have exceeded my expectations. Done more in the real world than I thought they would. But the federal budget is this giant monstrosity. We're not touching the entitlements yet. We're not touching the interest payments alone, right? Over $1 trillion. So I don't think what we're seeing yet. Now, maybe over the course of the year, they can come up with these trillions in savings and it'll make a difference. But right now, it's not really material. The people who are saying it's a drop in the bucket, mathematically, those people are correct. So the inflationary agenda is there. That's real. And the savings that might help that are still hypothetical. So takeaway from this is my outlook is still inflationary. That's very good for monetary metals, gold and silver. It's generally good for commodities writ large, selectively there. But it is good simply on the basis of the inflationary outlook for gold and silver. And then there's also just the chaos factor, the safe haven factor. And that goes back to why I said before, I don't think it's just the central banks buying. I think there's a lot of deep pockets in the US and around the world that are starting to say, you know what? Kind of a crazy world out there. It wouldn't hurt to hedge our portfolios with a little bit of gold. And as our mutual friend Rick Rule likes to say, you know, if we revert to mean of the multi-decade average of 2% allocation to gold, that would quadruple the investment demand for gold. I'm not predicting that. I'm not sure we'll ever go back to that mean. But even if it just goes back to 1%, right? You know, 1% is not a crazy number to say, you know, gee, that, you know, we'll allocate a little bit of insurance in our portfolios. 1% is not a crazy number. That would double the investment demand for gold. So all very bullish to me. And yeah, but will they? You know, Trump is talking about revaluing, or somebody's talking about revaluing it, and he just repeated, that's not what I had in mind, which is, you know, clearly he doesn't want to contradict the commander-in-chief, right? He doesn't want to get in trouble with his boss, but it's not something he wants to do. It's not what he has in mind. But so he was kind of caught between the what he thinks is right and not wanting to contradict the consensus in the White House. It's interesting, you mentioned my conversation with Doug. Doug thinks that's going to happen. He thinks that this is going to be part of the solution for the powers that be. If they revalue the gold, then that's a huge plus to the balance sheet of the United States government. And Doug thinks they won't even just market to market. He thinks they'll take it to $25,000 or $30,000 an ounce. Now suddenly we have a big surplus on the balance sheet, right? You know, hey, we're in great shape. We just went from triple C to triple A credit rating. I can see the argument for that, but that is a big ask. That is a tall order. And if you already got people like Besson sort of shaking their head and saying, that's not what I have in mind. You know, and that would be rocking the boat in a big way. It would be a de facto capitulation, really, of fiat, admitting that gold is worth 25 to 30,000 per fiat unit in the United States. That would be a huge mea culpa and admission of the loss of the value of the dollar. And Trump has, at least rhetorically, he's been talking strong dollar. So I'm not sure Trump would go along with that. So anyway, who knows? I don't think Doug or Rick Rule or you or me, none of us know if this is going to happen. So I'm not going to invest. I'm not going to make my investment decisions based on a revaluation of gold. If it does happen, I think it's nothing but bullish. There's no way that is bad for gold. However they play it, whatever price they do. I mean, even if they go under spot, if you go from 42 to anything north of that, there's no way that's bad for gold. So let's just set that aside. If it doesn't happen, so what? I'm already bullish on gold for other reasons. If it does happen, it wouldn't change how I invested. It just adds a tailwind to what I'm already doing. So I don't need to figure this out, Elijah. I don't know, and I don't need to know what's going to happen. It's just a potential tailwind. If the economy turns down, that should be bearish for industrial minerals like copper and anything else. But if the inflation overrides that, and this is part of the fiscal dominance thesis, Linald, and it might be that the fiscal dominance overwhelms these other pressures. What should be a recession, I think over the last year or two, hasn't been for this very reason, and commodities prices have rebounded. So there is potential for, if not 70s style, but at least some level of stagflation, where you see economic weakness and commodities prices going up anyway. Right? That's what stagflation would do. And then plan B would be there actually isn't that much recession. Whether it's Trump enthusiasm or whether it's deregulation or tax cuts or whatever. if American firms start investing more, hiring more, you could see not stagflation, but a reflationary boom. And that would be even more bullish for commodities. So besides short-term noise, chop in the near term, I'm actually quite bullish on monetary metals and the commodities complex going forward, but I want to be selective. So for example, in the oil patch, we still have voluntary constraint on the part of OPEC plus. So until that goes away, it's hard to be very bullish, because the moment there's more of a bid, then there can be more supply, and hard to be very bullish in that context. Let's say nickel, for example, we've got Indonesia and others pumping out nickel like there's no tomorrow. And lithium, we've got a new technology that instead of the evaporation technology, we've got the DLE, the direct lithium extraction, that's starting to happen, and it's low cost, and it's potentially a big new source. Meanwhile, more conventional production, China has outlined huge reserves and is ramping up production. So if the commodity complex as a whole averages upwards, which I expect, that doesn't mean that the rising tide will necessarily lift all ships. I think you have to be selective. You have to pick your commodities. Look for the ones that have actual supply constraints. Don't bet on them all. Look for the ones with supply constraints.